Hey folks, welcome to the Crypto Craze YouTube channel. I've been hearing a lot of videos about a market crash coming, and I want to shed some light and bring some information that is going to be extremely useful for investors coming up. I want to give 3 reasons here why the markets might crash in Q2 or even Q1 of this year. The first is going to be PE and price to earnings ratio. There's a few reasons why that this might affect the markets, and on a price to sales ratio, it's the most expensive market of the modern era. We have PE ratios that are at levels not even seen before the 2000 .com crash, according to unheard.com. And these prices and valuations are looking very similar to previous market crashes. This is a warning at how these bubbles work, similar to a Ponzi scheme or a pyramid scheme. We're starting to see that with the deep sea crash, how fragile these markets can be, quick to sell off. I think that with these extreme emotions that's going on now, it's not going to take much to switch this market into a bear market. I also want to talk about inflation as number 2. Inflation has been sticky. As much as people want to say that we've been able to bring inflation down, inflation has not been able to go down anymore. It's reached a plateau, a stabilization that is still above a cost of living that allows Americans to thrive in our country, and in the USA, for example. We've hit a low of 2.4%, but we couldn't hold it. And even that is above baseline of the Fed's trying to keep it at a 2%. We're rising back up to a 3% inflation rate. We cannot keep inflation down. And that is going to continue to erode the cost of living. It's going to affect employment. It's going to affect the labor markets, the job markets. If people don't think they're going to get a good wage, people might not even show up to work, you know. I also want to bring out a daunting warning here. In regards to quantitative easing. Once the Fed starts easing rates, we have seen a market crash throughout time immemorial. Every single time that we've reached these rates of 2 to 5% since the .com era. 2008, we've seen a market crash, a retail crash, and that's when the quantitative easing began. It's around the same exact time. Back into fast forward 2019, 2020, we've seen the pandemic effect. When quantitative easing took a hold again, we've seen the market crash. And now, I'm inclined to believe that this is no different. We're starting to see rates drop. If we continue to drop rates, we could hit another bubble. We could reach this point where markets begin to crash again, similar to the .com bubble, when things are beginning to become overvalued. Investors are getting too greedy as well. All these metrics combined together, they don't bode well for the markets to continue going on this parabolic rise that just seems unsustainable. Give me your views down below and let me know what you think about this. But between inflation, the history that we've had of quantitative easing aligning with market crashes, and the fact that inflation is not coming down to the levels that we can bring it down to. It just doesn't seem sustainable right now. Give me your views below. I'm still bullish on the markets long term. I'm thinking about trying to hedge some of my positions in case of a market crash. Let me know what you think down below. Thanks for joining the channel. And stay safe out there, guys. Crypto Craze out.